Let me tell you something most traders never understand. The market has never paid me for being right. It has only paid me for being right at the right time. I have seen men with brilliant ideas lose fortunes, and I have seen simple men with discipline make millions. The difference was never intelligence. It was timing. It was entry. And today I will show you the exact method I used. A simple 5-step approach that separates those who survive the market from those who disappear. My first lesson about entries came when I first stepped into the world of speculation. I believed what most beginners believe, that success came from prediction. I thought if I could just figure out where the market would go, I would become wealthy. But the market taught me a harsh lesson. It is not enough to be right. You must be right at the right time. I remember many trades where my analysis was correct. The market eventually moved exactly as I expected, but I still lost money. Why? Because I entered too early. And the market has no patience for early traders. The market does not reward hope. Hope is a dangerous thing in trading. It convinces you to act before the market confirms your idea. It whispers, "Get in now before it's too late." But I learned to ignore that voice because the market does not reward hope. It rewards evidence. And that is where most traders fail. They trade what they think will happen instead of what is actually happening. Over time, through losses and experience, I developed a simple method. Not complicated, not magical, but effective. A 5-step process for finding the perfect entry. Step 1, wait for the market to show its hand. The market always speaks, but it does not speak clearly at first. It moves sideways, hesitates, and confuses. Most traders try to force meaning into this confusion, but I learned to wait because when the market is uncertain, the trader must be certain enough to stay out. I do not trade in chaos. I wait for direction because direction is the foundation of every profitable trade. Step 2, identify where the real battle is. Price is not random. There are levels where buyers and sellers fight for control. Support, resistance, breakout points. These are not just lines on a chart. They are decision zones. And if you wish to enter the market with precision, you must know where these battles are taking place, because that is where opportunity is born. Step 3, wait for confirmation, not assumption. This is where most fail. They see price near a level and act too soon, too confidently, too emotionally. But I do not act on assumption. I wait for confirmation. A strong move, a decisive break, momentum, something undeniable. Because once the market reveals its intention, there is no need to guess. Step 4, enter with a clear plan. When I enter a trade, I do not enter blindly. I know exactly where I am wrong. I know exactly how much I am willing to lose. Every trade carries risk, and a man who does not respect risk will not remain in this game for long. Control your losses, and you give yourself the chance to win. Step 5, sit tight. Now we come to the hardest part, doing nothing. Most traders can enter a trade. Very few can hold it. They become nervous, watch every tick, and exit too early. But the real money, the life-changing money, is made in the waiting. I have said it before, and I will say it again. The big money is not in the buying or selling, it is in the sitting. I remember a trade that taught me the true power of this method. The market had been quiet, uncertain, moving sideways. Most traders were active, buying, selling, losing. But I waited. Then one day, the market broke above a key level. Strong movement, clear direction. That was my moment. I entered, and then I did nothing. Days passed, the trend strengthened. Weeks passed, the profits grew. That one trade did more for me than months of constant activity. You must understand this. The market is driven by human nature, fear, greed, impatience. When price approaches a level, the crowd becomes excited. They enter early, then the market pulls back. Fear appears. They exit, and when the real move begins, they are no longer there. This pattern repeats endlessly because human nature does not change. Most traders do not fail because they lack knowledge. They fail because they lack discipline. They cannot wait. They cannot control their emotions. They want action. They want excitement. But the market does not reward excitement. It rewards patience. It rewards control. The market tests every man who enters it. Not once, not twice, but again and again. It tests your patience, your conviction, and most of all, your discipline. There were times when I believed I had mastered the market, when my entries were precise, my analysis correct, and my profits growing. And then the market would change, not drastically, but just enough to shake my confidence. A trade would move against me, not enough to prove me wrong, but enough to make me question myself. And that is where the real battle begins. Not on the charts, but in the mind. Doubt is a dangerous companion. It whispers quietly, "What if you're wrong? What if this trade fails? What if you lose everything?" And when doubt grows, discipline weakens. You start to interfere. You exit early. You adjust your plan. You break your rules. And slowly you destroy your edge. I learned that once a trade is entered correctly, based on confirmation, with proper risk, it must be given time, because the market does not reward hesitation. It rewards conviction. Not every movement in the market matters. In fact, most of it do. As not. Prices will move up and down. They will create doubt. They will test your patience. But a strong trend does not move in a straight line. It breathes, it pulls back, it continues. The inexperienced trader reacts to every movement. The experienced trader ignores the noise because he understands the difference between temporary fluctuation and real change. Let me tell you something important. The best trades often feel uncomfortable, not because they are wrong, but because they require patience. You will see your profit fluctuate. You will feel the urge to take gains early. You will want certainty, but the market does not offer certainty. It offers opportunity, and opportunity requires patience. Holding a position is not passive. It is active discipline. It requires control, confidence, and trust in your system. Most traders can enter a trade. Few can hold it long enough to benefit from it because holding requires you to resist your own emotions. There will always be moments of temptation. Moments where the market offers small profits quickly. Moments where you feel like closing the trade early. Moments where fear tells you to take what you have before it disappears. But I learned something through experience. Small thinking leads to small results. If you want significant gains, you must allow your trades to grow, and that requires patience beyond what most people possess. There are moments in trading when everything aligns. The entry is precise, the trend is strong, the market moves in your favor. And in those moments, the reward is not just financial, it is psychological. You realize something powerful. Discipline works. Patience pays, and your method is sound. That realization builds confidence. Not arrogance, but quiet, controlled confidence. But even after success, the danger remains. Success can create overconfidence, and overconfidence leads to carelessness. You begin to think, I can bend the rules just this once. I understand the market now. I don't need to wait for confirmation. And that is when mistakes return, because the market punishes inconsistency. It rewards those who follow their rules and punishes those who abandon them. Discipline is not something you use occasionally. It must become a habit, a part of your thinking, a part of your behavior. You must follow your process even when you do not feel like it, even when you are bored, even when you are frustrated. Because discipline creates consistency, and consistency builds success. There is another skill rarely discussed, knowing when not to trade. The market does not always offer opportunity. Sometimes it is unclear, unstable, unpredictable. In those moments, the best decision is to stay out. Protecting your capital is just as important as growing it. A perfect entry is not about perfection, is not about perfection. It is about alignment. Alignment between market direction, price level, confirmation, risk, and your mindset. When all of these align, you have an edge. Not a guarantee, but an advantage. And in trading, advantage is everything. Trust in your system is not given. It is built trade by trade, decision by decision, rule by rule. Every time you follow your system, you strengthen that trust. Every time you break it, you weaken it. Without trust, you will always hesitate, always doubt, always struggle. Trading is not about quick success, it is about longevity, staying in the game long enough to benefit from your edge. And that requires patience, not just in trades, but in your entire journey. Because mastery takes time, experience takes time, confidence takes time. There is a kind of confidence that does not need to speak. It does not rush. It does not try to prove itself. It simply waits, and acts when the time is right. This is the confidence a trader must develop, not loud confident. See, not reckless confidence, but quiet confidence built from preparation, experience, and discipline. There was a time when I chased the market. Every fluctuation felt important. Every movement demanded attention. But over time, I realized something that changed everything. The market does not need me. I need the market. And that means I must wait for it to offer opportunity, not the other way around. Once you stop chasing, you start attracting better trades. Action in trading must be selective, carefully chosen, deliberate. Every action carries consequence. Every entry carries risk. And if you act too often, you increase your chances of error. The disciplined trader does not measure success by activity, but by quality. One well-timed trade is worth more than 10 careless ones. The market does not owe you anything. It does not reward effort. It does not care about your expectations. It simply moves. Your job is not to demand profit, but to position yourself where profit becomes possible. This requires humility, because once you accept that the market owes you nothing, you stop forcing trades. You stop expecting outcomes. You begin to respect the process. Structure creates stability, and stability creates clarity. Every successful trader develops a routine, a way of observing the market, preparing for trades, and reviewing decisions. This routine removes chaos and replaces emotion with logic. Over time, it builds consistency. And consistency is not accidental, it is designed. There will be moments when the market feels unclear, when direction is uncertain. In those moments, your greatest skill is restraint. Not every situation requires action. Sometimes the best decision is to wait, to observe, and to allow the market to become clear. This patience separates professionals from amateurs. The market is always moving, but movement does not always have meaning. Prices rise, seas fall, but not every move is significant. The inexperienced trader reacts to motion, while the experienced trader looks for meaning. He asks, is this movement part of a larger trend? Is this movement part of a larger trend? Is this a signal or just noise? And only when meaning is clear does he act. At first, discipline feels forced. You must remind yourself, you must control yourself, you must resist your impulses. But over time, something changes. Discipline becomes natural. It becomes your default behavior. You no longer fight your emotions because your system guides your actions. And when this happens, trading becomes simpler, not easier, but clearer. There is a rule I learned early, and it has never failed me. Protect your capital. Capital is your lifeline. Without it, you cannot participate, you cannot recover, and you cannot grow. Every trade must respect this principle. Because survival comes first, profit comes second. There is a clear difference between how amateurs think and how professionals think. Amateurs focus on winning. Professionals focus on process. Amateurs seek excitement. Professionals seek consistency. Amateurs react emotionally. Professionals respond strategically. And this difference is what separates those who last from those who disappear. Trading is not a short journey. It is a long game. A game of patience, discipline, and continuous improvement. You will not master it overnight. You will not succeed without effort. But if you remain consistent, disciplined, and patient, you will progress, step by step, trade by trade. There comes a moment after years of observation, mistakes, and learning, when the market begins to make sense. Not perfectly, but clearly enough. You begin to understand its rhythm, its behavior, its patterns. And this understanding brings calm because you are no longer reacting blindly. You are responding with awareness. At the highest level, trading becomes simple. Not because the market is simple, but because your approach is. You wait for the right conditions. You enter with clarity. You manage risk. You hold with discipline. And you repeat the process again and again. There is no chaos, no confusion, only structure and control. There is a point in every trader's journey when everything begins to slow down. Not the market, but your reaction to it. Where once there was urgency, there is now patience. Where once there was confusion, there is now clarity. And where once there was emotion, there is now control. This is not something the market gives you. It is something you earn through losses, mistakes, and discipline. You see, the market does not just test your strategy, it transforms you. It strips away your impatience. It exposes your weaknesses. It exposes your weaknesses. It forces you to confront your emotions. And if you are willing to learn, it shapes you into something different. A trader who does not react but responds, who does not chase but waits, who does not hope but observes. There will come a moment, a single trade, where everything you have learned comes together. The market is clear, the level is strong, the confirmation is undeniable, your risk is defined, and your mind is calm. You enter the trade without hesitation, not because you are certain, but because you are prepared. And then you wait. No fear, no doubt, no interference. Just discipline. As the trade begins to move, something changes, not just in your account, but in your mind. You begin to understand the true nature of trading. It is not about constant action. It is not about chasing profit. It is about precision. It is about waiting for the moment when everything aligns. And when that moment comes, you act. That one trade may not just change your account, it may change your entire approach to the market. Mastery in trading is not about knowing Eve, writhing. It is about doing the right things consistently, waiting when there is no opportunity, acting when there is clarity, controlling risk at all times, and trusting your process even when it feels difficult. Because mastery is not found in complexity. It is found in simplicity, repeated with discipline. So let me leave you with this. The perfect entry is not something you find every day. It is something you recognize when you are ready. It is not about prediction. It is not about guessing. It is about alignment, market direction, key level, confirmation, risk, and control. When these come together, you have your moment. I have spent years in the market, winning, losing, learning, and learning again. And if there is one truth I can leave you with, it is this. The market does not reward the fastest trader. It does not reward the smartest trader. It does not reward the smartest trader. So the next time you sit before a chart, do not rush. Do not chase. Do not force a trade. Instead, wait. Observe. Let the market reveal itself. And when it finally does, when the moment is clear, when the opportunity is undeniable, act with confidence. Because in trading, success is not about doing more. It is about doing less, but better. And the one who learns to wait, who learns to control himself, who learns to enter at the right time, will not just survive the market. He will master it.